Welcome to Honey Explains Money, your guide to financial clarity, where money stops being confusing and starts making sense for everyone. Let's begin this journey together right now.
All right, let's jump straight into this explainer. Today, we're unpacking a really specific, completely indicator-free scalping strategy that's built entirely around a pro trader's daily routine. Look, if you've ever felt completely overwhelmed by charts that end up looking more like a crazy laser light show than a financial instrument, you are going to absolutely love the clarity of what we're looking at today. We're zeroing in on a 100% rule-based system that works day in and day out across multiple markets. It doesn't require hours of prep, it relies on exactly 0 indicators, and all it demands from you is discipline. Here is our roadmap for today. We're going strictly chronological, starting with the pro trader's routine, moving into morning prep, finding the setup, trade entry, and finally we'll review some daily market results.
Part 1. The Pro Trader's Routine.
So, to kick things off, we kind of need to rewire how we approach the trading day. We're tossing out all those complex indicators and zooming in on just one single anchor point. You might be thinking, wait, one candlestick is enough to build an entire profitable system. Absolutely. The real secret to mechanical trading is having a rock-solid routine. You're not just sitting at your desk randomly scanning for things to trade. It's a sequence. You wait for the New York session to start, you wait for that all-important 4-hour candle to close, and only then do you shift your focus to hunting for setups on the 5-minute chart until the day ends. It is predictable, it's repeatable, and it's highly structured. Now, here's where it gets really interesting. This one single candle becomes the ultimate boundary for literally every decision you'll make for the rest of the day. And we aren't just picking any random candle either. We're specifically hunting for the 4-hour range. This is the exact distance between the absolute high and the absolute low of the very first 4-hour candlestick that prints during the New York trading session. That range right there, that creates your daily battleground.
Moving right along to Section 2. Step 1. Morning Prep.
Think of this as your morning coffee routine. Before you even dream about looking for an entry, you've got to set up your baseline chart accurately. And the best part? You are only ever toggling between 2 time frames. You start your morning on the 4-hour chart to map out your macro view. Once that is completely locked in, you switch gears entirely over to the 5-minute chart for the active scalping phase. You don't need a dozen monitors showing every time frame from 1 minute to 1 month. You just need these 2 views.
So here's the playbook. The absolute most crucial thing is you have to wait for that first New York 4-hour candle to completely close. If you're on a platform like TradingView, make sure your time zone is set to New York time. Seriously, that is non-negotiable. Then you find that first 4-hour candle of the current date. If it's still moving, just sit on your hands and wait. But the second it closes, you draw a hard horizontal line at its exact high, another at its exact low, and then you just extend those lines all the way to the right for the rest of the day.
Which brings us to Section 3, Step 2, the Setup.
Okay, your macro range is drawn. Now we shift into the active session, where we zoom into that 5-minute chart to hunt for our setup. This is where your patience really pays off, guys. You've drawn your boundaries, and now you're basically just watching to see how the 5-minute price action interacts with them. Mechanically, you are waiting for the price to break outside the boundary and then aggressively snap back inside. Now, the rules here are super strict. The 5-minute candle has to fully close outside the range. Wicks absolutely do not count. A wick just poking through the line? Not a valid setup. The actual body of the candle must close outside. Then immediately, or very shortly after, a 5-minute candle has to reverse and close back inside that range. And remember, this entire sequence has to happen within the exact same trading day. All right, Section 4. Step 3. Trade entry.
The moment that 5-minute candle closes back inside our established morning range, boom, we trigger Step 3. We execute mechanically, without any second guessing. We've got our fake out, and we've got our confirmation that the market rejected the breakout. Risk management is 100% rule-based here. Your stop loss goes right at the extreme edge of that fake out. So if the price broke below the range and popped back in, you go long, and your stop goes at the absolute lowest wick of the breakout. Broke above, you go short, and your stop goes at the very top. Simple. Well, actually, there is one small exception. If that breakout move was just massive before re-entering, putting a stop at the extreme higher low would create an unacceptably large risk. In those rare cases, you just tuck your stop loss behind a nearby key resistance or support level, like an order block, just to keep things contained.
Now, this brings us to the absolute golden rule of this routine's profitability. Everything we just talked about, finding the range, waiting for the fake out, placing the stop loss, none of it means a thing if you don't stick to this one rule. You must aim for a profit target double the size of your risk. By stubbornly demanding a 2x return, you ensure that just one winning trade completely wipes out two losing ones. It's a classic 2R, 2 times risk strategy. If your stop loss represents $50 of risk, your take profit is hard set at $100, period. You don't close early because you get nervous, and you definitely don't get greedy. You set it mechanically at 2x, and you let the market do the work.
Finally, Section 5. Reviewing daily market results.
Let's do our end-of-day review and get totally transparent about how this routine actually performs out there in the wild across crypto, Forex, and gold. Because a strategy is only as good as its live execution, right? And here's the absolute truth. Professional routines guarantee losses. This system will absolutely take 1R losses, and we're going to look at a highly realistic backtest right now. No strategy wins 100% of the time. Sometimes the price will break out, re-enter to trigger your entry, and then just immediately turn around and smash your stop loss. That is a standard 1R loss, and it's literally just the cost of doing business.
So let's look at the data. On the Bitcoin 5-minute chart, out of 7 setups triggered by that 4-hour range, this strategy handed us 5 wins and 2 completely transparent losses. That is roughly a 72% win rate in the crypto market. But here's the kicker. Because every single win was perfectly calibrated for a 2R profit, those 5 wins generated 10R total. Subtract the 2 1R losses and you're walking away with a net gain of 8R. That is a massively impressive day for trading such a basic, unenhanced strategy.
And it's not just crypto. Applying these exact same time zone rules to the Euro/USD Forex pair resulted in an incredibly clean day with only a single loss. Out of 6 total trades taken when the price broke that New York 4-hour range and snapped back inside, 5 of them hit that 2x profit target perfectly. It really shows you that the mechanics of institutional trapping, breaking out just to grab liquidity before reversing, happen just as rhythmically in traditional currency markets as they do in crypto.
Now gold. Gold was a bit choppier. It took 4 losses out of 10 trades. 10 trades is a pretty busy day, and taking 4 stop losses might completely rattle a novice trader, but let's just do the math. 6 wins at 2R, that equals 12R in profit. Subtract those 4 1R losses, and the net gain for the day on gold was still a highly lucrative 8R. And that brings us to this ultimate end-of-day scorecard. Just look at this. It brilliantly proves how a basic, no-frills version of this routine generates wildly consistent returns across completely different asset classes. I mean, whether the win rate was 60% on gold or 83% on Forex, strictly adhering to the routine, waiting for that New York candle, marking the boundaries, demanding that full 5-minute close, and utilizing a rigid 2x reward target produced nearly identical, highly profitable net results across the board.
So I want to leave you with this to really ponder. Could adopting a rigid, one-candle daily routine finally replace the chaos of complex indicator trading in your own portfolio? By stripping away all that noise and focusing on just a single time frame boundary, how much more efficient could your daily market routine actually become? As we've seen today, profitability doesn't come from memorizing more indicators than the next trader. It comes from having a relentlessly strict routine. Master the mechanics of that very first 4-hour New York candle, and you might just find incredible clarity in absolutely any market.
Thanks for watching Honey Explains Money. Subscribe for more powerful insights on wealth and finance. See you in the next video.